Hello everyone, I'm Suraj Sharma from Global Upside and welcome to today's virtual open house. Our panelists will begin by addressing the top HR, payroll, and finance considerations when expanding into China and conclude with a question and answer session. Please enter your questions via the chat window located at the bottom of your screen at any time. We will answer your questions in the order they are received. If we are not able to address all questions during our live session, we will respond to you individually via email. These questions and answers are intended to be used for information and guidance purposes only, not as legal advice. Now let's introduce our panel. First up, I'd like to introduce our VP of Human Resources Solutions, Mary Lemons. With over 25 years of HR experience, Mary helps support our clients across all aspects of HR, from providing adjunct services to multinationals in need of a strategic HR partner to creating scalable and efficient HR infrastructures. Prior to Global Upside, Mary held leadership positions at several companies, including Active Identity and Cashflow. Our next contributor is Andrew Wilson, VP of Strategic Accounts. Andrew helps some of the world's leading companies tackle complex global HR and payroll challenges. Prior to Global Upside, Andrew worked at PricewaterhouseCoopers, Oracle, and consulted for companies like Nestle, P&G, and Pepsi-Cola. Also on our panel is Nathan North, Director of Global Payroll. Nathan helps our clients develop robust payroll processes, systems, policies, and programs. Prior to Global Upside, Nathan managed global payroll for leading employers like Netflix. Over to you, panelists.
Good afternoon, everyone. This is Andrew Wilson, Global Upside, and I'll do the introduction. Thank you, Suraj. So obviously, China is one of the most complex jurisdictions and one of the hardest in terms of setting up your own legal entity or wholly foreign-owned entity in terms of the time frame and also the complexity in terms of the different cities and zones that you have to go into. A lot of companies go in. Obviously, you can do 100% owned wholly foreign-owned subsidiary, or WFOE as it's commonly called, or you can do joint ventures in the same legal entity. Typically, most companies go into the free trade zones, the most popular of which are Shanghai and Beijing, although there are obviously several around the country in terms of making that happen. Considerations obviously are very much around intellectual property and protection of your brand and your trade rights in China, as it obviously has the reputation in terms of a lot of companies copying and basically taking advantage of things of that nature. The other thing to bear in mind is that there is the same thing as you have in Japan, where there are company chops, which are physical chops that you actually have to use in terms of opening up bank accounts or establishing trade with a lot of the vendors in the country, as well as company compliance requirements. In terms of company law compliance, there is no requirement for resident directors. Obviously, it is somewhat advantageous sometimes to have directors in the country to execute business. However, you can use foreign nationals for everything. They have changed the rules recently in terms of work authorizations for foreign nationals. So they actually have implemented a national registry. They do track everyone who comes into the country, who's working for you, who is a foreign national, and they are required to register as they change their jobs as well. The other requirement is it's obviously a huge country, so there are obviously lots of different provinces and cities. They all have their own regulations. They all have their own tax codes, and often you are required either to register your WFOE in that zone or even sometimes open up branches to accommodate employing people in those environments. In terms of accounting as well as Human Resources and Payroll records, there are requirements to maintain local accounting records and personnel files, which can be subject to government audits. There is a lot of requirements in terms of tracking in the government systems to make sure they understand who you're doing business with and make sure that they are tracking everything from a tax environment concept. So very much regulated from that perspective. Also, besides the annual compliance requirements of the WFOE, you are also required to be reporting payroll taxes, statutory contributions for benefits, as well as sales tax and income tax in terms of the filing requirements. So they are quite onerous in terms of the timetable. In terms of employment options, obviously a lot of things in terms of going into China, because often it can take 3 months or longer to open up your own wholly foreign-owned entity and employ people. For the longest time, they have had agencies or labor dispatch companies who can hire people on your behalf to work for you. More recently, as with Global Upside as well, there are the professional employment organizations or the employer of records where people can hire employees on your behalf and act in the role of supplying the human resources and payroll requirements and managing the employment law. Whereas they act at your direction, even though you have no legal jurisdiction or presence in the country. Or, as I said, you could have your own wholly foreign-owned entity. But if you want to hire directly, then obviously it would be your own entity. If you want somebody else to hire on your behalf, there are the local 2 Chinese agencies that do it, as well as I said, a lot of U.S. companies are opened up as a PEO in the country, such as ourselves. In terms of hiring, they do have the concept of fixed-term contracts. In terms of defining specifically when you employ a person, it is for a fixed term, which can be renewable, but it does define so that in terms of covering the severance and the termination payments, it is governed by the fixed term of the contract. They're also required to be in the local language, so often they can be in Mandarin and Cantonese as well as the English version, so that you can have that dual understanding of what goes on. And there are extensive, and very onerous severance and termination payment requirements in the event that you do terminate employment. So something very much to be aware of. In terms of statutory benefits, as I said, there are definitely, in terms of the local requirements, there are statutory benefits and contributions that you have to make as an employer. They do have supplemental customary benefits as medical, life insurance, pension savings plans, which you may want to implement yourselves if you want to be competitive in the marketplace. And certainly that's something that we have contact with local brokers and we can assist with as it happens. In terms of the payroll, obviously the payroll services, once you have the WFI in place, once you have the registration with the payroll tax and statutory benefits, once you have the bank account set up, and it is very onerous to set up a bank account in China, and only certain banks are actually authorized to pay the payroll taxes and statutory contributions. So you have to be very much aware of who you're doing business with and who you are setting up a bank account with. And then as you supply a locally compliant payroll system, then obviously that's assisting you with preparation of what you need to pay for payroll taxes and the statutory benefits and assisting you with the filings. But everything does have to be executed by an authorized bank account to make those payments on your behalf. Other things to consider in terms of hiring employees, that there are requirements for pre-medical exams before you hire the person. So you actually have to have contacts with local labs in the city that you're doing business in to make sure that they carry out the checks and submit that, as well as the other requirements as it comes to in terms of the employment contracts and addressing the labor laws and the statutory requirements of the country. And as we always recommend, in terms of employment agreements, very important to make sure that all the terms of the employment, into the definitions of the holidays, vacations, statutory leaves, the benefits entitlements, and also what they're entitled to in terms of termination severance payments are addressed in the employment contract. So it's very clear to the employee the terms and conditions they're hired under. And if you do end up going in front of any of the labor courts in terms of what's the government in terms of the terms of the conditions of employment, it's very clear from the contract and very clear in terms of what their entitlements are.
Thank you, Andrew. Let's move on to answering some of the questions that have come in. The first question is, what are the requirements for time off?
Thanks, Suraj. I'll take that one. In China, vacation is tenure-based. It's actually quite modest, with 5 days for less than 10 years of employment, and 10 days between 10 and 20 years of employment, and 15 days for over 20 years of employment. It is practice for foreign employers hiring mid to senior level employees to provide an upwards of 4 weeks of vacation. Additionally, there are 7 national holidays, and it's considered good practice to provide for flexibility for travel around the Chinese New Year's holiday. Sick leave entitlement can vary, and it ranges from anywhere from 3 to 24 months, and this is dependent on tenure and what the illness is.
Thanks, Mary. What are the key differences between payroll in China versus Canada or the U.S.?
Suraj, I'll take that. This is Nathan North. The key differences of payroll in China versus Canada or the U.S. Is one, actually Andrew mentioned during the opening, is the bank account and making sure that you can make social payments out of your bank account. The second is that there is no national minimum wage, but each of the 22 provinces and 5 autonomous regions and 4 directed control municipalities do set minimum wage. And also do keep in mind that the tax system is complex, where that you do have national tax rates and local tax rates as well that exceed what is based in the U.S. and Canada.
Thank you, Nathan. What details can you provide about resident directors?
As we discussed at the beginning, there is no requirement for local nationals to be a director of the WFOE upon incorporation. However, it is advantageous to have a local national act as a director, so there's no requirement per se. However, in having a local national, there are requirements for, in terms of the company chops, so the execution of certain documentation has to be done in person, has to be done physically, and often in terms of doing that, the director actually has to be present at the time to do that. So if you want to open up a bank account, then rather than having someone fly to the U.S., to the country, actually visit the bank and execute the opening documents, then they can fulfill that role. But other than that, you can handle everything from outside the country.
Great. What types of pay should an employer expect to pay out other than salary and when, i.e. labor union quarterly expenses and disability funds?
Yeah, Suraj, I'll take that one. There are quite a few different payments that are made, and one of the things to keep in mind, Andrew mentioned company chops, and you'll hear this term quite a bit while working in China, and this goes right into submitting some of these payments. Some of the documentation will need a company chop stamp. So think of a company chop as a stamp, and that when you submit these payments, whether it's taxes, social contributions, annual individual returns, or individual income returns where annual income of 120 RMB or higher throughout the year, you will need to make sure that those items are stamped because it is a very manual process in China.
Thanks, Nathan. We are considering downsizing in China, and we have an employee reaching or at retirement age. What should we consider?
It's a good question. There are many things to consider when downsizing. In China, there's a lot of emphasis that's placed on seniority, and that's going to play a significant consideration in downsizing activities. There will be restrictions on employees getting close to retirement. So specifically, an employee that has been employed for 15 years and that's within 5 years of retirement is protected from termination.
Thank you, Mary. Who are the payroll, HRIS, ATS, and other systems vendors that can handle global clients, including China?
Thank you, Suraj. I'll take that. So in terms of, obviously, you have all the major payroll providers present in China, so ADP, Northgate, Safeguard, Ceridian, Celergo, and the HRIS systems like Workday and FairSale, companies of that nature are all entered into there. Obviously, the payroll services are a little bit more established in terms of doing business there. There is a still requirement for the personnel files being maintained in the country, so that's like the same as the payroll records in terms of making that happen. However, in terms of global payroll providers, they are somewhat quite advanced there in terms of working with partners in the country that have globally compliant systems that are in Mandarin and Cantonese and can supply the payroll information in terms of the local languages as well. So I think there's quite somewhat of established base, but these local requirements for the HR and the personnel files and the local accounting system does put more of an emphasis on having a lot more localization in the country to be able to affect making this happen in terms of executing your payroll, your human resources, and your benefit requirements.
That's great. Thank you, Andrew. What is the best way to manage fixed-term contracts?
So the vast majority of employees hired in the private sector in China are given fixed-term contracts. And generally, these contracts are for full-time positions, although they don't necessarily have to be. But the key point to consider is what length of contract to offer to each staff member that you're hiring. The fixed-term contract can be for any length of time. However, the length of the fixed-term contract has a major effect in the employer-employee relationship. The fixed-term contract can be renewed once, and then upon the second renewal, the contract effectively becomes an open-term contract. So the length of a fixed-term contract can also determine the probationary period, anywhere from 1 to 6 months, with the maximum 6-month probationary period being tied to a 3-year term contract. One thing to keep in mind is just managing the renewal process for the contracts in your workforce management.
Thanks, Mary. And building off of that, what is the termination process and what payments do you need to be aware of for terminating a fixed-term contract in China?
So there's a variety of different types of terminations, but in most terminations, the employer will be responsible for providing 30 days notice, and that can be paid in lieu as well. Additionally, there is a severance obligation that would be required with it. The employer may also provide an additional payment to reach agreement with the employee. It is very important that all of this is documented formally in terms and conditions to just avoid future liabilities regarding future terminations as well. One thing to keep in mind is that fixed-term contracts that are not renewed will also have a severance component with them as well, even though the contract has expired and the company chooses not to renew the contract.
And what are the obligations with respect to employee terminations versus resignations?
So with resignation, China allows employees to terminate their contract by the same means of giving 30 days written notice. If the employee is still in the probationary period, they would be able to give as short as 3 days of notice.
Great, thank you. Are options received in an employee recognition program taxable? If so, is this at issuance or upon redemption?
So actually in China, the employees are not allowed to hold options or stock in a foreign-owned company. So in that regard, this would not be allowable.
Great. So our local team has already made an offer to a candidate.
Actually, I just wanted to just chime in there, Suraj. In terms of the question about the termination process, one thing to remember in terms of mergers and acquisitions is that if you are in an asset purchase situation of a business, then the employees who are coming over, transferring over from the business that is being acquired are considered to be having their contracts terminated, are entitled to a new contract in that case. So even though you're setting up a new WFOE and you are transferring a business, it is treated as a full termination with a severance entitlement, and it's a new hire. If you are purchasing a business that has an existing legal entity that is being absorbed into your company, then you can bring them over using the same employment contract. So it's important to note that in terms of considerations, especially from a severance standpoint, and that you will have to deal with that process when you transfer the employees over.
Thank you, Andrew. That was a great point. Our local team has already made an offer to a candidate, and we are not fully aware of local employment laws. How do I minimize employment law exposure or risk in this situation?
Take that one, Suraj. So one thing to keep in mind is there is an obligation to provide employees with a written contract within 1 month of employment. So as long as you're within that 1 month of employment, you should be fine. Otherwise, failure to do so has a increased penalty for an additional 200% payment in wages for that employee who is without an employment contract after the first month of employment.
Great, thank you, Mary. We have to onboard a large number of employees quickly after an acquisition. What's the best approach? These employees are in multiple countries.
I'll say that's all right. So as I was indicating in terms of mergers and acquisitions, in China specifically, obviously you have to prepare the employment contracts within the 1 month period, and obviously it has to address all of the issues in terms of the contracts. In Asia itself, it depends on the country. China is a new employment contract. India, for instance, you can use transfer letters as you can in a number of other countries. Obviously, if you go to Europe, then the Acquired Rights Directive applies as is implemented in many of the countries, such as the UK, which is to pay in terms of what you have to do in terms of the transfers. So again, if you are operating a number of different countries, it varies country to country, but China specifically does require a new employment contract.
Thanks, Andrew. What are some of the non-salary or infrastructure costs we need to consider when expanding into China?
So I can take that in terms of obviously the requirements to do business there. Does have this requirement in terms of the accounting systems, the integration into the government reporting requirements, the personnel files, and a lot of the obligations in terms of how you're transacting business there. So I think that you have to think in terms of back to satisfying the local requirements to be able to put that infrastructure in place to meet the government regulations, especially from an accounting, human resources, and payroll perspective.
Great, thank you, Andrew. How do we ensure headquarters maintains control, proper reporting across multiple countries?
Again, so I'll take that. So I think what's important in terms of as you grow, obviously when you start doing business in many of these countries, you're using a local provider who's giving you a locally compliant accounting and payroll system and making that happen for you. As you centralize control, then you do work towards centralizing in your own ERP system, your own payroll systems, and your own human resources systems. So you're going into an Oracle, SAP, NetSuite, Intact, everything, so that you see the transactions on a daily basis. The payroll reporting in a centralized system, you can go in and see exactly who's getting paid what. And the most important thing is to maintain control over your bank accounts, because obviously then you're seeing exactly what's been authorized, and you're intervening from a central location to say, I approve, will make those payments for those people. The more you can centralize control to have universal company policies and procedures and controls, the better.
Great, thank you, Andrew. Looks like we have a few more minutes here. Can we recap the legal entity setup and hiring options in China?
So sure. So as I said in the beginning, in terms of the wholly foreign-owned entity, or enterprise, should I say, that is used in China, again, it's a process where most people incorporate in the free trade zones, the most popular of which are Singapore and Beijing. It typically, in a free trade zone, it's typically a 4 to 6 week process from submission of the application from the corporations. And then you have to do the registrations for the income taxes, payroll taxes, indirect taxes, and statutory benefits. After that, open up the bank account, and then you're in a position to actually start hiring people. So very important to make sure that you work with companies like ourselves or law firms in terms of that process. But do focus on your end goal. Your end goal is to employ people, onboard them, and get them set up for payroll. So to do that, you do need the entity incorporated, you do need the registrations, you do need the bank account that's compliant and can meet the requirements in the payroll taxes and paying the statutory benefits. And you do make sure that you have that ability to be able to onboard quickly and get the payroll going.
Great, thank you. That was really helpful. So thank you everyone for your questions, and thank you all for attending. I know we have several more questions in the queue, and we will respond to you individually via email. You can also reach out to our panelists individually as their emails are shown on your screen. Thank you all for your time today, and we look forward to you joining our next virtual open house.